It's been a while since my last crypto update and a lot has changed. Bitcoin has pulled back from its highs of 108k to now 84k. Altcoins have been crushed even more and the whole market feels very different compared to just a few months ago. In today's video, I'll walk you through exactly what's happened since we last spoke, why I didn't chase altcoins and my plans going forwards. If you're serious about crypto, this is probably the most important video that you'll watch this cycle. Welcome to the channel, friends. In today's video, I'm going to be providing an update on my last video for crypto. If you haven't watched it, then click the link above. And I'm going to be talking about a potential trade that I'm going to consider taking. So stay tuned in this video. Since my last video on crypto, Bitcoin went from a high of 108k down to 84k today, which is down 22%. And it went down at some point all the way down 31%. And the majority of that reason is because the stock market as a whole was down and there's a whole issue of tariffs and there's a lot of volatilities in market generally. So you might be thinking Bitcoin's not affected by tariffs, so why is Bitcoin going down? Well, the truth is Bitcoin is a risk asset, and when the broader market sells off, such as the stock market, people want to get rid of their most risky positions, and Bitcoin is one of those assets which fall in the high risk category, so people would get out of Bitcoin first before getting out of things like the stock market, etc. So that's one of the reasons why Bitcoin is down so much. But Bitcoin being down 30% from its peak, looking at other altcoins, they've been down much more. Ethereum's been down more, Solana's down almost 50%, and most of the altcoins are down. And one of the case studies I want to talk about is Mantra. Mantra, one of the cryptocurrency, their ticker is OM, and this was one of the big cryptos within the top 20 market cap at the time, and essentially it was one of the blue chip cryptos, and this was actually one of the cryptos on my watch list. And the reason it was on my watch list is because since December 2023 it's been up 41,000%, and even more interestingly, when looking at its chart against Bitcoin, it's been above the bull market support band since 2023 and it's not gone below it, and every time it has gone to the bull market support band, it's just been going up and up. However, that all changed last week when Mantra went down over 92%, and when we look from the peak, Mantra was down at 1.95%. And this goes to show no matter how big a cryptocurrency is, an altcoin is always going to be very risky. And even Bitcoin is risky. When looking at crypto, Bitcoin has been there from the start. And so when looking at cryptocurrency, the least risk, the lowest risk cryptocurrency out there is going to be Bitcoin, because it's the one that's got the biggest market cap. So more money is required to move its price. And Bitcoin has stood the test of time. It's been there since the start. All of the other altcoins came after Bitcoin. I didn't read too much into what happened with this altcoin, but it was something to do with the founders of the altcoin. They basically cashed out and they ran away with the money. So then it led to a whole domino of liquidations, and essentially pretty much everyone has lost their money. It went from about $6 and now it's under 60 cents. It's not a good feeling if you held, but this sort of thing is not the first time we've seen it happen. If we look at Rune, for example, from its peak this cycle is down currently about 84%. That's not because the founders ran away with the tokens, it's for a different reason. But again, it just goes to show how volatile these cryptocurrencies can be. There was another cryptocurrency just last cycle where it was known as one of the blue chips of last cycle called Terra Luna. And essentially this cryptocurrency went from lows of about $3 and it went all the way up to over $100. And then overnight one day it just went down from $100 all the way down and made its way down to literally fractions of a penny. So this goes to show that, you know, when investing in cryptocurrencies, you got to be very careful in what you're investing and you got to diversify effectively. And if you are in crypto, it's the best to just stick with the top market cap cryptos, so the ones that have stood the test of time. So your cryptos such as Bitcoin, mainly Bitcoin actually, and then you can talk about things like Ethereum, XRP, and maybe Solana, BNB. But I wouldn't venture too far down in terms of market cap for this very reason. We don't know. It's very hard to tell which cryptocurrencies are going to crash down like this, because when these things happen, it happens very fast. It's a slow grind up, but it's the elevators down. If we go to my video that I posted on crypto a couple of months ago, the key advice that I received that I mentioned in that video is to value your portfolio in Bitcoin and not fiat. And fiat would refer to things like the pound, the dollar, or whatever currency you have. And the main reason for that was because of this picture that you can see over here, where over time, whatever fiat currency you have, so if we use the example of dollar, the value of the dollar has decreased. So you might still have a $20 bill, but in 1998, you could get a full shopping cart with that. But a couple of years ago, you can barely get anything with $20. Whereas with one Bitcoin, back in 2012, you could barely get anything with a Bitcoin. There's a case of someone that paid thousands of Bitcoin for just one pizza. And that just goes to show how less the value was in 2012. But fast forward to today, over time, the price of Bitcoin has gone up so much that it can just buy you so much more. And that's why one of the advice that I received was to value your portfolio in Bitcoin and not fiat. And just continuing from that, the other quote was, if you shift your mentality from looking at the fiat value of your portfolio to the Bitcoin value of your portfolio, then you will be successful in crypto. And again, it's the very same reason. I used that exact same picture in the video, and that's the reason why. This more dollars, that will come in crypto. But your goal should be to accumulate more Bitcoin. And the reason being is because the value of Bitcoin, it just increases over time. In my last video, I mentioned that I'm mainly Bitcoin heavy. That's my portfolio, is mainly Bitcoin. About over 90% of my portfolio is Bitcoin. I don't have a full Bitcoin. However, the money I do have in crypto is mainly that. And the reason I didn't buy most other coins is because they've just been going down against Bitcoin. Yes, in terms of US dollars, it might have gone up, but in terms of the Bitcoin valuations, they're just going down. And just examples of what I mean by things have just been bleeding against Bitcoin is, if we just use an example of Ethereum. The price of Ethereum, it has gone down in terms of the US dollar as well. But just as a case study, I just wanted to show you, if you had one Bitcoin on this date here, which is 5th of September 2022, if I was to sell one Bitcoin and buy Ethereum with that money, I would be able to get 11.7 Ethereums, which at the time is probably good. But if I fast forward to today, if I was to buy one Bitcoin and I sell that one Bitcoin and spend all of that money on Ethereum, I can buy 53 ETH. So I can buy almost 5 times the amount of ETH if I had just bought one Bitcoin at that time and just held that Bitcoin until today. And this is what I mean by the concept of valuing your portfolio against Bitcoin. And how would you have known this at the time? It's simple. It's by looking at the ETH BTC chart. And if I just put that up here, this is the chart of ETH BTC. And in fact, I mentioned this in my previous video, where at the time, the price of Ethereum against the US dollar was up. The valuation at the time was 0.03 against Bitcoin. And looking at that same chart today, the price of Ethereum to Bitcoin is 0.01867, which is almost half of what it was 2 months ago. And this is the same chart, it's the same lines. I've not changed anything. There's a clear resistance over here and there's clear support over here. From its peak, Ethereum is down over 78%. So Ethereum moving from proof of work to proof of stake, which is known as the merge, happened around this time over here, this peak over here. And since then, Ethereum is down almost 80%. And I showed you that that means that I can buy much more Ethereum using one Bitcoin than I could a few years ago. And you could do this with most cryptocurrencies. I showed you Ethereum, we could look at XRP. XRP against Bitcoin, it bounced from this really good support level, where if you had bought it at that support level, you'd be 250% up against Bitcoin. So well done if anyone looked at this support and actually bought XRP. But since it actually hit that support, it's pretty flat at the moment. And you could argue that there's some strong resistance around this level over here. So XRP is just trading between these two lines over here. Only time will tell whether XRP actually breaks out from here, but XRP chart actually looks quite strong because it's holding well at its bull market support band. But if it starts breaking down over here, then it favors Bitcoin more than XRP. Next up, you've got BNB. Again, BNB to Bitcoin, the chart's not that exciting. It's got up move, you've got a period of consolidation, you've got an up move, and you've got a prolonged period of consolidation over here. Maybe buying BNB at this double bottom over here would be a good price. But until then, it's not something I'm interested in at the moment. I'm better off holding Bitcoin because this pattern is just flat, meaning it's performing in line with Bitcoin. And if I want less risk, then I can just stick with Bitcoin. Next up, we've got people's favorite, Solana. So if I go to the Sol to BTC chart, this is also down quite a lot. And to be honest, since December 2023 to January 2025, it's just been trading sideways between this range over here. And then it broken down and then it started going down. My prediction is that it'll probably go down, bounce to about here, and then just continue its way down. This reminds me very much of the Ethereum to Bitcoin chart, and I'll show you what I mean. When we look at the ETH to Bitcoin chart, we had a strong move up, then we got a period of consolidation, then it breaks down, and then it continues going down. That's what happened with Ethereum. With Solana, what I'm seeing is something similar where you've got a move up, you've got a period of consolidation, you've got a breakdown, and then maybe this will just continue going down. It looks very similar to the Ethereum to Bitcoin chart, but just further back in time. So at this moment, I'm not that interested in Solana. I'm just looking to see whether this actually plays out. And if it does, then maybe around this region over here, I'd be interested in picking up some Solana for the long term. But that level over there is another 56% down or so from the current prices. Then next up, we've got Tron. So zooming out of the Tron chart, it's pretty sideways. But looking at it in the shorter term, this is one of the only cryptos that I could see which is actually trading above the bull market support band against Bitcoin. That's important because if I then look at the US dollar price, so TRX to USDT, you could see that TRX is almost at its all-time highs and is trading above the bull market support band. So Tron is actually quite a strong crypto at the moment, just looking at the technical side of things, because it's outperforming Bitcoin and it's also outperforming the bull market support band against the US dollar. So this is one to keep an eye out on currently. Then we've got Dogecoin, one of the biggest meme coins out there. I mean, looking at the Doge chart, it's nothing interesting at the moment. You've got a breakout and then it's just been trading in this channel over here. If someone is interested in Doge, then maybe a buy over here where there's triple support 1, 2, and then maybe a third time over here. And if that doesn't hold, then maybe somewhere around here. So we're talking about a down move of another 10% to about 23% against Bitcoin before it starts looking interesting. And finally, in the top 10, we've got Cardano. I mean, there's nothing exciting about this chart. It's an up move, it's down, it's up move, it's down. It had one pump over here, but the overall trend is still down for ADA. Maybe if you're really interested in ADA, then around, I don't know, there's support levels over here, maybe a double bottom over here. And if you want to maybe move that down somewhere there, these are levels which you might want to consider on ADA, but it's not outperforming the bull market support band. It's down against Bitcoin. And if we look at the US dollar chart as well, there's nothing really exciting going on over here. So you can see that looking at most of the top cryptocurrencies, none of them look like they are gonna outperform Bitcoin. Maybe Tron does, but all of the others, they don't look like they're going to do that at the moment. Bitcoin dominance is still in an uptrend as well, way above the bull market support band. So it seems as though at the moment, we don't know, it's hard to tell when alt season is actually going to be. There was a wick down over here from the bull market support band and altcoins surged. Things like XRP done like a 2-3x, ADA had its pump. Lots of cryptocurrencies went very high in this downtrend over here. And this is just a preview to show you how alt season would be when Bitcoin dominance actually goes down. But at the moment, there's no sign of that. So you can only trade the markets that's in front of you. So just as a reminder of my plan is to stay Bitcoin heavy, which I have been. It's less stressful. I don't need to look at my portfolio so much because majority of it is in Bitcoin. So you just look at what Bitcoin's doing and what other altcoins are doing against Bitcoin. The second part of my plan was to buy altcoins when it's devalued against Bitcoin. So when I feel that an altcoin is down a lot against Bitcoin, so the charts that I've been showing you, when they hit some of those supports, then I'd consider opening positions in those altcoins by converting some of that Bitcoin into the altcoin. For me, the most important thing is the risk reward. I need to make sure that the risk that I'm taking is in line with the reward that I'm getting, because there's no point of buying something which is going down and down against Bitcoin when I can just stick to Bitcoin, because Bitcoin overall in the long run is going to be going up. Like, I know 5 years down the line, I don't know where crypto will be as a whole, but I know that Bitcoin will be number one. I know Bitcoin will still be there. But then if I invest in coins like Mantra, or I don't know 5 years down the line where that's going to be. So for me, I like keeping the risk a bit low. And in my opinion, this might be a very unpopular opinion, but I think that altcoins are there to be traded and not invested in. I know some people that have been holding some altcoins for so many years in hope that they're going to go up. And for me, it doesn't make sense because altcoins, they have their time where it goes up, but eventually they all come crashing down if they even start again. So for me, I just feel that Bitcoin as a longer term investment and altcoins just to trade to try and get more Bitcoin. That's what makes sense to me. So for the next section of my video, I'm just going to show you some perspective in terms of how you can potentially make a 20x in a crypto cycle. And I'm not here to advertise any altcoins or say, invest in this alt or that. No, that's not what I'm here for. But just from my experience of investing in crypto since 2017, it's a very hard, true lesson that I've learned in terms of how to actually make money in crypto. And I wish I knew this years ago, so I'm passing this on to you. And this method is very low risk. Although crypto is risky in general, I feel it's much lower risk. And I feel the potential reward that you'll get is much better. And the third most important thing is I feel that it's just so less stress, because crypto, people lose a lot of money into it. People, they get addicted to crypto. And I think this method makes the most sense. And I'm going to talk through it right now. So the first step is to DCA into Bitcoin in a bear market. If you don't know what DCA is, click on the video above and that will talk you through what DCA is. But essentially dollar cost averaging into Bitcoin during a bear market. And for this, I want to actually put some numbers to it and help you visualize this. This is a website called Intothecryptoverse. This is by the legendary Ben Cowen. I've got a subscription with him, so feel free to check out his page. But this is something that I wish I knew years ago. This is a simulation of DCAing, and this is just to show you how much you could make. If I was to say, I will invest $50 every week into Bitcoin, and let's just say choose the day Friday, and let's just say I started that in 2021 until today. If I was to do that, then over the space of those 3 years, I would have invested a total of £10,000 into Bitcoin, and currently it would be worth $25,000. So I would have made a gain of 138%, and the actual amount of Bitcoin I would have had was 0.3 BTC. So what I'm going to do is I'm going to show two methods and show how much US dollars you would have made versus how much Bitcoin you would have made using each of these methods for this process that I'm explaining. So $50 DCA every single Friday, regardless of the price of Bitcoin, you would end up with 0.3004 Bitcoin, 0.3004 Bitcoin, and that would have cost you $10,650. The next step would be to ride the Bitcoin dominance in a bull market. So that means to hold Bitcoin whilst Bitcoin is going up. And if I did that from this support level, November 2022, I would be up 422% against the US dollar over here. I can't do it against Bitcoin because Bitcoin divided by Bitcoin is 1. I could do the US dollar. So that $10,000 that I invested, I would be up $420. So that Bitcoin that I invested, 10,650, I would be up $420. So that's 4.42. And that equals 47,073 pence. So that's how much. And I still have the same amount of Bitcoin. The next step would be to convert the Bitcoin into altcoins when they are devalued against Bitcoin. So personally, I would wait for one of the Ethereum as an example because that's the second biggest cryptocurrency. And I feel currently it is very undervalued against Bitcoin. And you could see this when you look at the RSI because the RSI is very oversold. But even if the RSI wasn't there, I drew a resistance and I drew a support level. And I'm just using the inverse of the chart just so you can see exactly how much Ethereum is we're talking about. But November 2022 would buy me about 13 Ethereum. But if I just held the Bitcoin, so if one Bitcoin buys me 53 ETH today, that means 0.3007 BTC, which is what I had, times by 53 would equal 15.9 Ethereum. So 15.9 ETH. And that's still the same value because the actual amount of US dollars is still the same, but the only thing that we've changed here is no longer Bitcoin we have. We've converted 0.3 BTC into 15.9 Ethereum. So the US dollar stays the same over here. And that's essentially what we have. Then we ride the altcoin during alt season. So now my balance is 15.9 Ethereum. And I know alt season's not started. This can potentially still carry on going down. It can go down more than I can imagine as well. And let's just say it's alt season. Currently we're not in alt season, but let's just say we are. Let's just say Ethereum goes up 300% against Bitcoin. So we're talking from this valuation to this valuation. It's hard to say how much this is against the US dollar because this is the Bitcoin valuation. So when it comes to here, I'm just going to leave the US dollar blank. But if Ethereum goes up 300% against Bitcoin, then using the calculator again, I initially put in 0.3004 Bitcoins into Ethereum. But if Ethereum then goes up 300%, then you're talking a 3x. So if I times that by 3, I now have 0.9012 BTC. That's how much Bitcoins I have now. So you could see that from the start, I've tripled the amount of Bitcoin. After Ethereum has hit my target in the alt season, I have two options. I can either cash out or convert back to BTC. Just for argument's sake, let's just say Bitcoin remains the same price, 84k, and we now have 0.9 BTC. And I can do this as a calculation. So I can go on 0.9 times the price of Bitcoin. So I can go on the 0.9 times by the price of Bitcoin, so 84,205, and that would mean I've got 75,885. So you could see I went from $10,000 to $75,000. But remember, if Bitcoin goes up, let's just say Bitcoin, I don't know, there's targets of 150k, 200k out there this cycle. Only time will tell if we actually get to that. But let's just say for argument's sake, 120k is what Bitcoin goes to. So 0.9012 times 120k, then you've made 108k. And you've got 0 BTC because you've sold it, all of your BTC for US dollars. So that's 0.9012. So you have two options over here. You've basically 10x'd your money over here, which is absolutely amazing to do. You can sell it 0.9 BTC for your US dollars and then cash that money out and use it in your personal life. Or the other option is you can just keep it as Bitcoin if you don't need the money immediately. You can just repeat the whole step for the following cycle and just continue increasing the amount of Bitcoin that you have. So this is the reason I say that, accumulating as much Bitcoin as possible is the best strategy. The other thing I wanted to show you was something called the dynamic DCA, which is what I plan to do in future cycles. And how does this differ from just normal DCA? So if we use the same scenario where we are dollar cost averaging £50 a week every Friday, same dates, the only difference this time is Ben, he creates something called risk metrics, where he puts a number from 0 to 1, depending on how risky it is to invest in Bitcoin. The actual formulas in terms of how he calculates this, etc., we don't know. It's just something that Ben knows himself. But essentially, the closer to 1 the risk metric is, that means the risk for it is very high. And the closer to 0, that means it's a very low risk. So the goal is that up until 0.5 risk, we invest in it. But the moment Bitcoin starts going above 0.5 risk, we're not investing in it. And this just shows how it works essentially. You've got 0.5 risk over here. And when Bitcoin is between 0.4 to 0.5 risk, you're investing just $50, i.e. X. But then if it goes below 0.4 risk and above 0.3, then you do 2x, so $100, then 3x, 4x, and 5x. And then when Bitcoin goes above the 0.5 risk, then we're not DCAing at all. So this is something called dynamic DCA. So if you did that in the same time frame, you would have invested a total of $10,750. $10,750. So $100 more than you would have if you just done a normal DCA. And from that, you would have got 0.4298 BTC. So already you've got much more BTC than you did by just normal dollar cost averaging. And if you rode that same 420% move in the Bitcoin price in this Bitcoin dominance rally, then you would have gone from $10,750 to, let's just say, around the same level over here. I'm just going to put the same US dollar. So if we got that same 442% move, so if we're talking that same 442% move in Bitcoin, then we're talking from $10,750 to $47,515, and that's the same amount of Bitcoin. And the next thing to do to keep it the same as before is to convert it to Ethereum. So 1 BTC buys us 53 Ethereum. So 0.4298 times 53 equals 22.7. So now I have 22.7 ETH. So I've got 7 more ETH than before. Then the next step is if Ethereum then does a 3x, then we are talking 3 times the Bitcoin, which is now over 1 Bitcoin, so 1.28 Bitcoin. And if Bitcoin was to hit 120k, then we're talking a total of $154,000, which is equivalent to this. Then we're talking a 3x, so $154,000 equivalent to 1.2894 BTC. And you could see how different this is from just doing a normal DCA. So you're getting much more Bitcoin, and you're, in terms of the dollar valuation, you've done a 15x. And all of this, when you think about it, it's a slow process. It takes time. And it's just something where if you have patience and you're not chasing the next meme coin and things like that, you will be successful in doing something like this. The first few points have already played out, but we don't know when alt season is. We don't know if Ethereum is going to go down further. These are just things to consider where crypto doesn't have to be complicated. You don't have to keep chasing, like researching into some of the altcoins which are ranked about 250 in terms of market cap. You don't need to make it that complicated because you don't know if those altcoins are going to be there in 5 years time. Now my plan going forwards from here is keeping an eye on the Bitcoin dominance chart. When it starts breaking below the bull market support band, then I might be thinking, okay, is alt season coming? But at present, we're still very far away from the bull market support band. So at the moment, it still favors Bitcoin going up rather than altcoins. The next thing is I am eyeing a trade on Ethereum. This chart is really tempting. You might be thinking, okay, Ethereum's a falling knife, it's gone down so much. But you know, if Ethereum, it goes down in this range over here, so under 0.017, then it is a price that I'm willing to convert some Bitcoin into Ethereum. And my goal is to then ride that wave. So let's just say Ethereum falls to this support, just hold it until there, get 360% more Bitcoin than I already have. So something like this is, if it plays out, then great. I'm going to invest in Ethereum. I'm going to convert some of my Bitcoin into Ethereum. But if it doesn't play out, it's not to worry, because I hold, my majority of my portfolio is Bitcoin. So I'm not really missing out. The people that will be missing out are those that are sat on US dollars hoping that price goes down here, but then, you know, if it doesn't go there, then they're still on US dollars, and US dollars over time, it just goes down in value. So for me, something like this is a very high risk reward, because Ethereum's so oversold against Bitcoin. It's hard to tell how much further down it can go. It's really good support over here, 1, 2, all of this support over here, 3, 4 lines of support if it gets here. And I think it's a very good risk reward trade, this one. So if you are looking to increase the amount of Bitcoin that you have, then keep an eye out on this chart. Things like Solana, I still feel that is very far away from where I would personally buy. So it's just interesting to keep an eye on these charts. But for me, Bitcoin, Ethereum, it'll do at the moment. And you might be thinking, how is Ethereum going to go down all the way to here? I've done a little table just showing how it's possible. So we've got the price of Bitcoin over here, 84k. We've got the price of Ethereum over here, which is $1,500, meaning the Ethereum divided by the Bitcoin price is this, which is what you've seen on the previous page. Now, there's a few scenarios. If the price of Bitcoin goes up and the price of Ethereum goes up the same amount, then Bitcoin valuation is going to stay the same. And I think we just got to treat it as maths. You know, in maths, you've got fractions, and essentially you got the number at the top, the numerator, and then you got the denominator, which is the number at the bottom. Bitcoin is your denominator. So if Bitcoin is much bigger than your numerator, Ethereum, then the overall value of this, the actual number that you're going to get, is going to be small. But if Ethereum starts going up, because it's the numerator and Bitcoin does not go up, then this number is going to get bigger. So I've made a few scenarios where, you know, if both of them go up the same amount, then the BTC valuation will remain the same. But then if the price of Bitcoin goes up and the price of Ethereum goes up, but the price of Bitcoin goes up much more than Ethereum does, then the ETH BTC valuation is going to go down, which is what's been happening, which is similar to what's been happening with most altcoins. But then there's another scenario where if the price of BTC stays flat, but the price of Ethereum goes up, then the ETH BTC valuation will go up. And other scenarios is if the price of Bitcoin goes down and Ethereum goes down much more, which actually has been happening with majority of the altcoins and Ethereum recently, then the ETH BTC valuation will go down. Similarly, if the price of Bitcoin goes down, but less so than Ethereum, then the ETH BTC valuation will go up. And then if both of them go down the same amount, then the ETH BTC valuation will stay the same. So these are the scenarios how Ethereum can go to the price that I'm looking at. So if BTC just continues going up, but Ethereum does not go up as much as BTC, then yeah, it might go to my target buy level, which is 0.0165. Or the other scenario is if both BTC and ETH goes down, but ETH just gets hammered in the process, then that's the other scenario. So if it does get there, then that's a trade I'm going to take. I just feel that the risk reward makes sense doing something like this. I'd like to hear what you're thinking in terms of the ETH BTC valuations or crypto in general. What are you looking to buy? Why are you looking to buy it? And what are you looking at essentially? So feel free to comment below. If you like this video, please like and subscribe. And if you haven't already, feel free to watch my previous video on crypto. Thank you for watching.